So, if you've ever listened to a great jazz composition, solo, or watched a golfer navigate a tight dogleg left, you've seen the same thing, right? Structure and creativity work together. And believe it or not, that's effectively what good tax planning looks like. So, we're going to talk a little bit different today, right? A holiday season coming up. We want to wish everybody happy holidays, a prosperous new year, just in case we don't catch up again before the end. But remember, my name's Tony Bruce, CPA, more than just an accountant. But what you probably don't know is that I'm a jazz guitarist, an avid hobbyist in that regard. And I'm also an avid golfer, playing most of the time to a handicap and having some fun with some friends and so on and so forth. But what does all this have to do with tax planning? Well, today we're going to take a little bit of a different look, right? I have a couple of notes here we're scrolling through, and we're going to take a look at how it applies to tax planning. Like all three of those mindsets work together: tax planning, jazz improvisation, and also golf. So let's start with jazz, right? So a lot of people think, if you're not familiar, that jazz musicians just wing it, right? Okay, it sounds like they're just randomly playing together, but it sounds good, right? So how could that be? Well, the reason being is there's an underlying structure. In case you're a musician listening out there, there's a harmonic structure. There's things like scales, there's key signatures, there's notes, there's tonal centers. Without getting too deep into the weeds and philosophical about it, basically there is some type of a structure to the song that you're playing. For musicians out there, whether it's a blues, whether it's rhythm changes, whether it's a standard, at the end of the day, there's a structure. And taxes are the same way, right? There's rules, there's deductions, there's different ideas that you can put together. Now, what the tax people do is, in our case, what we're doing is we're playing with the other parts of the tax, right? We're looking at deductions, we're looking at entities, we're looking at optimization, we're looking at opportunities to improve your cash flow. All that interplay is going on. Well, guess what? The same thing happens on the bandstand. So the brass section may be improvising over changes, and they expect the rhythm section to have an underlying harmonic structure so that they know what to play. Again, not getting into the weeds. What scales are they using, and so on and so forth. The problem with a lot of people is that they just work on one scale, for example, or they just work on one tax strategy and one time during the year in April. If you understand a little bit about music, you'll hear the same harmonic changes or the same structure. The song plays over and over again, sometimes 8, 10, 12. In your world as an audience, maybe 14, 15, 16 minutes. And then what'll happen is that each musician takes a chance to improvise, whether it's the bass player, the drummer, whether it's the sax player, whether it's the guitarist, the vibraphone, etc. Well, that's the same thing that's going on with tax planning. Great improvisers know the structure cold. Charlie Parker used to say, learn the structure, learn the scales, and then forget about it and feel it. That's what we do with tax planning. Now, there is a system of rules, and in music, that's called chord changes. In our world, it's the tax law. So what are the changes that business owners should be responding to? Musicians are responding to, particularly jazz musicians, are responding to other musicians still within the same framework, within the same ecosystem, within the same underlying rules. Well, what we look at as business owners are market conditions. We take a look at income changes. Is your sales, or are your sales running higher or lower? What's your profit like? What's your deductions like? Do you have the same legislation in play? This summer, we had the great One Big Beautiful Bill, or the Trump tax law changes too. We apply all these different ideas to tax planning. So it doesn't have to be boring. It doesn't have to be mundane. Think of it the same way. And as this interplay happens, we improve cash flow. So it's the same thing. The great thing about jazz is that you can go into a special club in New York or somewhere around the world, or even your local place, and a lot of musicians are already speaking the same language. And what happens is they sit down randomly, it seems like, and they improvise. They're not improvising randomly. They're using the rules and they're using the chord changes. We do the same thing. Freedom comes from being prepared. And that's why those musicians have freedom to be out there, because they've prepared. They understand the structures. They understand the rules. They've practiced their scales. They've created the same kind of moves with their fingers, and they know their chops, so to speak. Well, we do the same thing. We learn the rules at the outset. We build the plan, and then we follow through and help you adapt and execute. as the interplay goes on before all of these things, the rules, the deductions, the optimization, the markets, what's happening with business, what's happened with the economy. When you utilize all that together, hopefully it becomes a great composition, just like a great jazz tune. Now we're going to talk next about golf and what golf management is like. We've already discussed about how good tax planning isn't just a one-off, it's improvised throughout the year. So, what you really want to talk about next is how a golfer navigates a fine dog leg, for example, and what they do in order to manage their way around the golf course. Many times people would think that the golfer is just trying to hit the ball as hard as they can, as opposed to strategically trying to place their ball in positions. The right spot on the green, for example, or perhaps in the left side of the fairway versus the right side of the fairway, how to avoid that tree, how to avoid that trap. A lot of times they will get involved in looking at the strategy and structure of how the architect planned, right? So tax planning and tax strategy really works the same way. So switching from the bandstand, I guess, to golfers, especially single plane golfers like myself, right? I'm a little bit older, so I got involved in the single plane most recently to save my back and my body. But basically, what happens is swing mechanics matter for sure, no matter what method of strategy you're using. But here's how golfers think strategically, as we talked about a second ago. Where's my miss? Where are the hazards? What's the wind doing? Where do I want to be putting from? So again, we just don't swing harder; we swing smarter, so to speak. This is the way in which businesses and individuals can plot their way around a golf course or around the tax strategy. You can have different landscapes, for example, just like you have different links golf courses or inland golf courses, etc. You can perhaps have real estate investors. You can have high income W-2 employees or people that are investors. You can have entrepreneurs. You can have retirees. And the bottom line is you're going to play each one of those holes a different way. So dogleg left, dogleg right, link style, inland style, parkland style, etc. But what you really want to know is you want to build your game around one shot. Some people say, like the famous Harvey Penick said, well, let's build your game around a 7-iron. What could you hit a 7-iron? Do you hit it 170 yards, 140 yards? That really doesn't matter. You just want to be able to make sure you have a go-to shot. You also want to be able to have putting. You want to not have three putts. So this is the same thing with tax planning, tax strategy, tax compliance. You don't want to miss deadlines, right? You want to make sure that you don't come across any unexpected passive activity losses. You want to make sure that you're not under withholding. The last thing you want is to have interest accrue on your salary, on your profit throughout the year. You want to have a management system, a tax management system quarterly to look at what your payments should be to avoid interest, to avoid penalty, but also to manage your cash flow correctly. Because the last thing you want is a surprise, right? You don't want to have to fall back and realize that, oh my goodness, I have this gigantic refund. So that's in a lot of ways why tax planning is a lot like playing golf. So just like picking a landing spot, you want to pick a landing spot on your business. You want to have accurate records, have an idea about profit, loss throughout the year. You want to know what your revenue numbers are, and you want to be able to strategically plan around that to take advantage of most of the deductions. Here's what's going on, right? We have jazz improvisation going on, and they may practice scales and practice structures. Golfers practice their swing, they practice their short game, they practice their tempo. Tax planning is no different, right? True tax planning has a rhythm to it, just like a golf game has a rhythm to it or a song has a rhythm to it. It happens throughout the year, not just once per year. So what we do is we do quarterly check-ins, right? Absolutely. Cash coming in, cash going out. Who do we know who owes us? What else do? We look at the different trends in the economy, in the income trends. We look at your business specifically, and we get to truly know your business. What other things are we doing? We're projecting the liability, and we're making sure that when life changes or when business changes, we're making adjustments. That's why we're proactive, and we continue to meet with you, again, mostly on a quarterly basis, as you all know. Last but not least, we look at entity structures, and we make sure that we're not just jamming this in either in April with one strategy, like one chorus of a song, or we make sure that we're not just jamming in and trying to hit a career shot at the end of the round or at the opening of the round. We're doing this throughout the year. So we're not just focused on December 31st, and we're not just focused on April 1st. Now, as the year ends, of course, we are working with people in getting their payments down as low as possible, making sure they're properly structured. So just like a jazz mentor or instructor has for a music teacher, or even a golf instructor meets with their students, we meet with our clients. We meet with them on a periodic basis to make sure we're keeping them accountable. The idea is this: 90% of the industry does not do it the way we do it. We're in an advisory capacity. Of course, we want to prepare your tax return, of course. But what we really want to do is plan for you strategically. We want to meet with you on a proactive, periodic basis so that what happens is the strategies are put together, the plan is put together, right, for either how you're going to play the song or how you're going to play the hole. But at the same time, we want to help you manage your way around like the way a good caddy does or the way your other band members do. So what do you want to do? You want to do three things before the end of this week. You want to look at your year-end numbers and know what's going on, just like you want to know your distance, or you want to know how you're going to approach a particular song. You want to pick the right shot, so to speak, or you want to pick the right scale. You want to understand the harmonic structure. You want to identify the one hazard to eliminate. Maybe it's poor bookkeeping. Maybe you missed an estimated payment. These are the kind of things that you want to know. Maybe you're not tracking your real estate revenue correctly. And then what you want to do is also pick one long-term strategy that you're going to implement in 2025 and beyond, even into 2026. Most of the time with our clients that we're meeting right with now, we want to look at early next year, perhaps, does it make sense to be an S Corp? But even for last year, are they capitalizing on their HSA accounts, or should they be maximizing, or not should they be, but how can they maximize their retirement plan contributions? And we're managing that, so to speak, that process of going through the golf course. So improving one piece every year over time will increase your business many, many ways. I hope this makes sense. Remember, listen, if you have a question or you thought that this was kind of a cool way to look at tax planning and not being boring, like and subscribe, comment below, shoot a message, let us know. We can help you out with your question. We're paying attention to those. We always look at the comments. We always look at the questions. And we can also, last but not least, schedule a free consult. We jump on a call for 30 minutes or so, go over what's going on in your business even before year end. And maybe we can make some examples for how to approach the next song, how to approach the next shot or the next golf course, and finally, how to approach your business in this changing environment, especially in light of the new legislation. So thank you again for listening. Looking forward to seeing you next. Tony Bruce, CPA, more than just an accountant. Have a great day and happy holidays, everyone.